also need your TFN number, and you will need proof of address so that it is regulated by the government. Your TFN is for tax purposes because this is extra income and you have to pay your taxes. And it is also good because if you make loss, uh, if you fit all the terms and regulations of the Australian government, you can actually claim back your losses that you made through trading. So your TFN will be required. Come end of financial year, you will be able to claim your taxes and you claim back your losses. Okay, so when you look at this diagram here, it looks intimidating, but it is not that intimidating. So this one is a bullish candlestick. Bullish simply means that it is the buyer's market. It is the buyers who are controlling, the buyers are winning, so it is the buyers who are ruling. And bearish, the bearish means that it is the seller's market, the sellers are in control. When you are trading profit, you remember it's like a seesaw or a tug of war. You know, a seesaw, when someone is down, the other person is up. When the other person is up, the other person is down. So it's like a seesaw. So you'll be going up and down. So at times it can just be at the same level. No one is up, no one is down. You are just both at an equilibrium. So a candlestick has got parts. This line is called a wick. This line here, a wick, and this one is a body. This is the height. So it means that this is the highest point of where the buying reached, and this is the lowest point where the buying reached. The low point of the buying, the high point of the buying, and this is the close, this is the open. Same to this bearish, but when we are at the bearish, the open and the close are inverted. The open is now up here and the close is now down here. This small line here is a wick. So there are so many diagrams on the internet that you can Google, you can search for. This one is from forexlight.com. So these candlesticks, they really help you know when to buy. They will know you when to sell, and they help you sort of like anticipate what is happening, what is going to happen next. So they are really helpful and they are good for us and they benefit us. So when you are trading forex, knowing when to get out is always important. And also when you are determining if you buy and you should sell, it is not only candlesticks and lines. You should also know what is happening on the news, especially know what Trump is up to, know what Donald Trump is up to, because you don't want to be caught while you are on a buy with a pair that involves a US dollar currency, and you are buying US dollars, and Donald Trump appears on the news, and there you are with your US dollar. Oh, you won't know what happened. It will just slide down dramatically. It just slides down when Trump is on TV. On Monday, there was chaos on the market. Trump made the headlines that he wasn't paying tax or something, and the US dollar was flying down. Those who were selling, they really made a lot of money, but those who were buying, I really feel for them. I'm pretty sure they experienced a lot of losses, those who were in a buy position with the US dollar. So it is good to always be in touch with the news, to always know what is happening, to always know what is going on. So we buy low and we sell high. So when you're buying, it's bullish. When we are selling, it's bearish. That is how I can simplify the terms. So if it's a pair that is rising, that is coming from below going up, it would be a bullish pair. If it is a pair, a currency pair that is falling, coming from high, going low, it will be a bearish pair. So that is why you see bearish, it is coming from high and low, and it is open here and closes. Because when we are selling, we sell when it is when we think that it is now at the top and it is going to come down. That is when we sell. So the sell is opened at the top and then we close the sell at the bottom. But when we are buying, we believe that it is now at the lowest point and it is going to rise. So we enter from the bottom and we exit from the top. That is why the open is from below and the close is from up. I hope that makes sense. So the wick and the body will tell you what is happening. The wick and the body. You see, there are some that are very long and some that are very short. Like if you look at this one, it's a short body, but the wick is long. But this one, it is a long body, but the wick is short. So the body tells you what is happening, and you sort of like anticipate what is going to happen next. If you study these candlesticks nicely, it will sort of like show you, guide you when to get in, when to get out. So these ones here, the hammer, the inverted hammer, the dragonfly doji, the bullish engulfing, the piercing line, the morning star, the morning doji star, the three white soldiers are the bullish patterns. So if you look at these patterns, they tell you that it's time to execute a buy, these bullish patterns. So these bearish patterns, they tell you that it's time to execute a sell. So when you see your candlesticks aligned in such a way like this is called the hammer. So the hammer has a very short body and a long wick. A long wick and a very short body. This is a bullish pattern, and it is anticipating that the trends are going to drop. So if you see a hammer, you have to anticipate that trends are going to drop. So what would have happened is there was a rejection of lower prices. So the sellers are losing. So the hammer just comes in and hums and rejects and turns things around, because you see here it was the sellers who were dominating, but suddenly the hammer appears. The hammer puts an end to everything. The hammer says enough is enough. We are now taking over, and the sellers will start losing. This is the hammer. And then there is the inverted hammer, the inverse hammer. It is also called the inverse hammer, this one. So this one is the hammer here, this one is the hammer. So this inverted hammer, it simply shows you that buyers are now winning it. So you have to anticipate for a buy. So it tells you that buyers are now winning, and it depends on the color. If it's green, we know that they are the bullish and they are the buyers. And then we have this one is the dragonfly. The dragonfly is a doji. So a doji is sort of like it doesn't have a body. It doesn't have a body, and you should look if it is like a T. If it has a T on top, it means that the buyers are winning. If it has a T, so you should make sure that you don't confuse the dragonfly doji and the gravestone doji, because this means the opposite. When it is like this, it means the sellers are winning. So the sellers are winning, but this one, it is the buyers who are winning. Okay, so you should make sure that you look and you open your eye so that you don't see the wrong thing. So you should also, you don't make a decision based on only one candlestick. You group all of the candlesticks and you try to see what is happening, because you don't want to make wrong decisions. So this one is called the bullish engulfing. If you see a setup like this, so the bullish engulfing, next to it there is a seller, and then the for example, you are selling your mangoes for $10, and then appears this huge man, ask you how much are mangoes, and then tell them it's $10, and then they say no, I'll give you $1. Then he takes all the mangoes and then he goes. So you've been bullied, right? So this is what happens. This seller has been bullied by this big buyer. You see how small the seller is. The seller is so small and the buyer is huge. So suddenly it is the buyer who has determined what is happening, and it is the buyer. The buyer is winning. It is the buyer who has reversed the signal. It is now the buyer who is ruling. So that's a bullish engulfing. Okay, and there's also a piercing line. This one it just normally sort of like guides you. It sort of like shows you what happened and what is happening, but it doesn't really sort of like show you if you should exit or if you should enter. So I wouldn't really use this piercing line to really make a decision if I want to buy or if I want to sell. So this is just this is from my experiences. I'm just telling you what has worked for me, what works for me, what I've been doing and what I've been learning. I'm not trained, I am not a professional. I'm just sharing so that people who want to start trading can also start and learn. So you can always go to a professional and they can teach you according to what they've learned in books, because some people have gone to uni to just study this and they probably have the best experience. They probably know better because they did 4 years just studying this, so they probably know. So the morning star is like a morning star. You know, when the night was very long and you are just wishing if it would be morning, and then when you are almost losing hope, and then you see a morning star. That is what it does. So what do you think a morning star does? A morning star. What does a morning star do? You have been waiting and waiting. You know, joy comes in the morning. You've been waiting and waiting. So it is the bullish reversal pattern. The bullish reversal pattern, it means that the sellers have been winning, and probably you were on the wrong side and you've just been hoping, and then you see this star here, you say, whew, better, things are now going to change. So that is the morning star, bullish reversal pattern. And then there is the morning star doji. The morning star doji is bodiless. It doesn't have a body. This one has got a body. And then there are 3 white soldiers. Okay, so there are some softwares which use black and white. This one uses red and green. So here where there's green, it will be white. So these 3 white soldiers, when you see an arrangement like this one, it is telling you that there was probably a drop. There was a drop in the trends, and now things are about to change. So things are about to potentially rise because there has been a drop, but things are about to potentially rise. So when we think things are about to potentially rise, where do we click? We click buy. That's where we click buy. So if you know all these combinations and you know these patterns, they'll help you to know when to buy and they'll help you to know when to sell. Okay, so next we are going to the bearish patterns. I said bearish are the sellers. So it simply means that the sellers are dominating the market. The sellers are the ones who are in control. So there is the shooting star. You know what a shooting star does? A shooting star is from the sky, right? And then it goes, comes down. It is a falling star. It's falling to the ground. So a shooting star, if you see this one like this, it almost looks like a hammer. If you see it like this, it is the opposite of a hammer. Okay, it is the opposite of a hammer. The shooting star, it's red. It shows you that there is a potential drop in the market. So if you were buying, it means stop buying. Now you have to click sell. It's now time to sell. This is what the shooting star means. And then there is the hanging man. This one is the hanging man. So the hanging man is red and has got a short body. It has a short body and there is a long tail. That's the hanging man. Do you remember the game Hangman? Did you ever play hangman? What do you think the hanging man does? What do you think is the job of the hanging man? What does the hanging man tell you? So the hanging man, this one, it forms at the end of an uptrend. So things were going up and the upward trend is now coming to an end. The market is shifting to bearish. So it tells you that there will be a potential drop. There will be a potential drop. As you can see, things were rising and now the hangman appears. There is going to be a potential drop. Things are going to be dropping. And then there is this one is the gravestone doji. The gravestone doji, it's this one here. It almost looks like a T, which is inverted. It's different from a T. It's different. Make sure that you don't confuse your signs. So what the gravestone doji, it simply tells you that sellers are winning. Sellers are now winning. So it's now time to click sell. It's now time to click sell. This one is the bearish engulfing. What do you think happens with the bearish engulfing? I told you about the bullish engulfing. What do you think happens with the bearish engulfing? The bearish engulfing. What happens? Are you sure you know what happens with the bearish engulfing? I think you know. Yes, you are right. So the bearish engulfing occurs at the end of a rise. It marks the end of an increase and it tells you that there is a potential drop, there's a potential decrease. So the bearish is bigger than the last candle. The next candle will be bigger in body. And then there is the dark cloud cover. The dark cloud cover, what do you think it means? There is a dark cloud. There is a dark cloud. So the dark cloud cover, it means that there is a bearish reversal. There is a bearish reversal. So the bears have taken over. That is what it means. The bears have taken over. That is what happens with the dark cloud. The bears have taken over. And then we have the evening star. The evening star. The evening star is made of a 3 candlestick pattern. They have to be 3, and then it will be in the middle. That's the evening star here. It has to be in the middle, and then it tells you that there is a potential drop. There is a potential drop in the market. So just 3 candles and then a short candle between long green and a long red. So it is telling you that there is a potential drop. Here it tells you there's a potential drop in the market. So when there is a potential drop, you have to prepare to sell. You have to click the sell button. The evening Doji star. The evening Doji star, it just works the same as the evening star. It's only that it doesn't have a body. and then there are 3 black crows. Remember I told you that some softwares where we have red they have black, where we have green they have white. So these 3 black crows, they mean the opposite of 3 white soldiers. So 3 black crows, they mean that there is a potential drop which is occurring after an increase. There was an increase, things were rising, but now a drop is coming. You see these 3 black crows. It tells you that it's now time to click the sell button. So watch out for these trends. Let's see if you are able to identify them in your eToro account. So in your eToro account, if you go to your watch list, you click on your currency, you click on chart, you'll see candles. Okay, if you want to change this to a line, you come here on the double arrow, you can change this into a line. You come here, you can change this into a line. There it is, a line. If you want to change into a candle, you click here, candle. There is a candle. So ladies, are you able to identify what is happening here? What is happening here? What is happening here? Are you able to identify what is happening here? Or what is happening here? What is this? What is this star here? What is happening? So that is how you use your candlestick analysis. You should keep on practicing in your demo account. Keep on practicing and practicing so that you know what is going on. If you can't practice because maybe you don't have enough documents, try plus 500. Plus 500 gives you a demo account without many documents. You just they'll give you a learning platform. So I think on Monday I'll just teach you how to navigate around plus 500 so that you can practice using plus 500. It is easy to open. So in the meanwhile, if you can't open an eToro account, try to just open a plus 500 account. It is for free and they give you a practicing ground. They give you a demo account so that you can learn how to trade stocks. I hope you enjoyed this video. Please subscribe, like, comment and share. Keep on practicing until you feel confident that you now want to deposit your money. If you want to deposit your money, you just click this button here, deposit funds, and then a form will come up. You fill in your amount that you want to deposit and then your name on your card, and then you submit, and then you will be uploaded your account with money. So I recommend that you start only with 50 US dollars. eToro uses US dollars, so all the money will be in US dollars. So I